and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Olivia Grace-Curran. European markets closed higher on Thursday, with global investors remaining focused on the inflation outlook. The Stoxx 600 index finishing up, with financial services and mining stocks leading gains. The UK's FTSE 100 closed in the green, up 0.8%. France's CAC gaining 0.5%, also ending in the green. Meanwhile, Germany's DAX dipped. Wall Street was shut on Thursday in honour of former President Jimmy Carter, who died in late December, aged 100. Investors are eagerly awaiting US non-farm payroll jobs data tonight, which is expected to show employers added 160,000 jobs during the month of December. The unemployment rate is anticipated to hold steady at 4.2%. Overnight, Fed Governor Michelle Bowman and Boston Fed President Susan Collins expressed the importance of taking a cautious approach to further rate cuts. Philadelphia Fed President Patrick Harker said he still expects the US central bank to cut interest rates, but added that any sort of imminent move down isn't needed. Treasury yields eased following a sharp sell-off that sent 10-year yields to a more than 8-month high. 10-year yields fell 0.2 basis points to 4.7%. 2-year note yields fell to 4.3%. The US bond market closed early in honour of former President Jimmy Carter. The US dollar strengthened for a third straight session. The loonie slipped 0.1% against the greenback as investors await Canada's response to US tariff threats. One Aussie dollar is currently buying 62 US cents. And Bitcoin has dropped further, currently sitting just above 92,000 US dollars. Well, oil prices rose more than 1% on Thursday as cooler weather gripped parts of the US and Europe, boosting winter fuel demand. Brent crude futures were up 1.3% at $77.14 a barrel. Gold prices rose to a near 4-week high on Thursday, supported by safe haven demand, as investors weighed how US President-elect Donald Trump's policies would impact the economy and inflation. Spot gold was up 0.3% at $2,670 US dollars an ounce, while copper prices soared to 2-month highs, hitting $4.28 a pound. Well, Brad Gastwirth from Unearthing Opportunities joins me now live from New York. Now, Brad, some exciting things coming out of the CES this week. Tell us what jumped out at you.
Yeah, for sure, Olivia. CES is the largest technology trade show here in the United States. Over 100,000 people attend. And AI was really the theme du jour. Not a major surprise there, but AI taking over everything in terms of robotics, going into new industries like industrials, having industrial equipment, and that industry really starting to be transformed. And we're seeing AI in health, in consumer electronics, across the board. So that was the theme du jour, and I don't think that it's not going to stop, and we're going to continue to see AI transform industries for the next several years.
And Brad, what did you take from Nvidia CEO Jensen Huang's comments?
Yeah, so I mean, he was the keynote. He had some really great things to say in terms of one on the product side. They introduced their new GPU, which is a game changer. I mean, for sure, Nvidia is the leader in GPU technology. But if you look at what they're doing and fueling the AI growth, Nvidia is still going to be a leader for several years. And if I use the analogy of where we are with AI, we're not even at the inning one yet. So we have several years of explosive growth for companies that have the component suppliers like Nvidia, and then also the larger cap companies that are supplying these services like an Alphabet and Meta.
So Brad, where to from here? How important was this conference in setting the tone in tech and AI for 2025?
Yeah, and it's a good question, Olivia, because in terms of the products that we saw at CES, these aren't going to come to market for the next, call it 2 to 4 years. So CES is a great preview of what's going to happen in the years to come. So it's just going to show robotics is really taking over. And the major concern here is what's going to happen with jobs to the middle market. If you look at the retail environment and going into a retail food store, most of those minimum and middle wage jobs go away. If I look at some of these large companies, if you look at customer service, if you look at many different departments, marketing, AI can replace many functions. So it gets a little scary down the road of what's going to happen. But in terms of companies become more profitable and more efficient, which will help the bottom line, and that will help valuations.
And Brad, this week we saw Microsoft announce that they will spend $80 billion on US AI data centers. How exciting is this for the company and the industry?
Yeah, Olivia, you know what? We're getting a lot of questions on this topic, so it's a great question here. I mean, Microsoft's spending an exorbitant amount of money, that $80 billion on AI infrastructure. This is really going to be positive for companies like Nvidia, which we just talked about, along with advanced micro and other semiconductor companies. When you build out these data centers, there's a tremendous amount of component suppliers and semiconductors that go in there. So the semiconductor companies will be benefiting. And again, this is not over. There are certainly some major macro things we cannot ignore. If we look at the Middle East, if we look what's happening with Russia, if we look at what's happening now with Canada and the US, those are major macro situations. But over the last 4 or 5 years, the market has completely ignored the macro. And I think that's going to happen in 2025 as well.
And let's now take a look at Tesla. The company is facing some mixed publicity.
Yeah, so Olivia, I mean, we've gotten one of the worst delivery numbers in terms of trajectory from Tesla. I mean, we've had a decline, which is for the first time on the delivery side. So it's, is this a major concern? We certainly have to pay attention. This is a big yellow flag. I mean, Musk is a brilliant technologist. Tesla is a technology company, not an automotive company. But if I am looking at the EV space and looking at Tesla specifically, I am certainly more concerned. I think you have very capable competition now from the incumbents. I have seen significant improvements across the board. And you get a lot more bang for your buck when you look at some of these alternatives to the Tesla. Also, on the service side from Tesla, you need to wait in the months, not weeks, for some basic service levels for your automobile, and that's just not good enough for many Tesla owners. So I'm a little bit more concerned on the EV side. I mean, again, the company is a technology company, Olivia, and they're doing incredible things and are going to bring some really interesting things to the market. But that's not a large cap I'd be chasing at these levels.
And Brad, of course, overnight US markets were shut to mourn the death of former President Jimmy Carter. The bond market, however, was open. How have things gone there?
Yeah, so I mean, it's very light today, quite honestly. We didn't see a lot. I mean, I think you mentioned this, Olivia, in your preview about the non-farm payrolls coming out tomorrow. All eyes are on unemployment and what these numbers will say tomorrow. I think you're going to have a lot of volatility. I think the employment rate might shock people to the more negative and have a little bit of an uptick. If that's the case, I mean, that might actually give the Fed more fuel to continue to cut rates. But ultimately, I think the job market is portraying a lot worse picture than what is really seemed like from reading. And I think that's going to have some implications. Ultimately, it's mostly driven by efficiency, which is good for companies, but it's a little bit disastrous when you think about the middle class getting disrupted so abruptly.
And you say you're bullish on US equities and precious metals.
Yeah, so I mean, if I look at the environment for 2025, I see AI really fueling the growth again this year, and I see a very narrow leadership as we have in the past. I think you do see maybe more of a shift and some beneficiaries on the smaller cap, because I do believe when Trump comes to office, that he's going to have a little bit more positive environment for acquisitions. So I wouldn't be surprised to see acquisitions pick up into 2025. But I do see the market ignoring some of these major macro news items like it has over the last several years, which will be positive for the market. I also am and I sound like a broken record on your station, over the last 3 or 4 years been talking about gold and silver. I'm still very bullish on gold and silver and precious metals. I think they're a must own in people's portfolios. They're a great hedge, and it's a tangible asset that it has value across the globe. So I'm still quite bullish on gold and silver as well.
And so it's only about 20 days until Trump's inauguration. So what will investors be focusing on in the meantime?
Yeah, we're getting into earnings season here, Olivia. So we're gonna, pretty soon we're gonna get some first numbers for some of these companies for Q4. I think Q4 numbers on the retail side were very strong in the US. The retail outlet, we saw very good spending numbers. Those will be positive. What we will be paying attention to is really what the outlook is saying. And I think there's going to be some more uncertainty and more uncertainty as a tone from many companies when they report their Q4 earnings. But that's really where the focus is right now. I mean, the focus is on economics. What are those numbers and those indicators showing? What are the first reads of earnings? But ultimately, there's still a very positive backdrop with AI and the efficiencies that it will cause to the market, which ultimately make companies more profitable.
We've seen companies, including the likes of Google and Microsoft, donate to Trump's inaugural fund. What are the benefits of doing this for companies like that?
Yeah, so Olivia, we've seen many different companies, actually donate to both of the campaigns. I think there's a lot of hedging that was going on here in the United States. And actually, if you look at Meta, what Zuckerberg just did on his board by having Dana White join his board, which is a very pro-Trump advisor. Ultimately, I think these companies want to get in good graces with the new president. I think if you look at, before there was more rhetoric and how they had more negative commentary towards towards President Trump. But will it make a difference? I mean, President Trump will do as he sees fit. I think, large cap companies, and I don't think it's a 2025 issue, but in the next few years, there's going to be a likelihood that some of these have to be broken up given the size. Now, having said that, I actually think the sum of the parts are worth more than where we're currently trading at. So I think if they are broken up, you actually benefit as a shareholder. But I wouldn't be surprised in the next few years that we do see something happen with a shakeup in large cap technology.
And just going back to bonds, we saw them spike to an 8-month high yesterday. Do you expect this trend to continue?
It's interesting. Again, I think, if you look at there's an inverse relationship between interest rates and market. And I really do think that the economic data that comes out has really big impact to the fixed income market. So we see bonds move based on some of these economic indicators. I think we need to see what happens with the payrolls. We need to see more of these retail numbers. And then, I don't think we're going to continue to tick higher in rates, just because I think that on the rate side, we might not be over uncutting. So, I mean, if these economic indicators come out worse, there's no way that those bond yields will continue to increase. They will have to decrease, and prices will go up, but the interest rates will go down.
Interesting stuff, Brad. Well, Brad Gastwirth from Unearthing Opportunities, thanks so much. And just before we go, getting one final check on where the local market is set to open when trade gets underway. SPY futures are up 26 points. That does it for this edition of The Global View. Stick around, the Open is coming up next.